In this video, I'm going to explain what volume is in the stock market and why it might be important to investors. On my screen here is a stock chart, and this is for Apple, and it has the normal price bars that you see on most stock charts, and in this case, each price bar represents 1 day of price activity. Now down here on this particular stock chart, you'll see these bluish colored bars here, and these each represent the volume of activity for that day. And volume is specifically referring to the number of shares of stock that changed hands. So that's the volume as it pertains to stocks. Now there's also options, and so if you're referring to volume as far as options go, then it's referring to the count of options that changed hands. But for stocks, you're talking about the number of shares of stock that changed hands. So we're looking at Apple here, and what we can do is look at any given day at what the volume was. And so if you look up here, see how it says volume right here and it shows a number? And notice how that number changes as I mouse over different days on this chart. So this day there was 172 million. This day there was 97 million. And you can see that corresponds with these blue bars back here. And so right along here, there's the bars are relatively low compared to, say, this bar. On this bar, there was just a lot of volume that day, 246 million, according to that figure right up there. So it went from 246 million this day down to 80 million this day, and these other days, 58 million. So Apple is one of the most actively traded stocks out there. So the volume is going to be high for Apple because it's such a popular stock to trade. And that can be helpful information to know. How does volume impact an investor's decision-making process? Well, for one, stocks that have high volume are typically easier to get into or out of. And that's because there's so much supply and demand that there's basically going to be buyers and sellers lined up. And as a result, a lot of times the bid-ask spread is tight. And I'll show you an example here with Apple. So this is the price ladder for Apple, and you can see that the bid right now, where this, the highest green numeric value is 226.48 or 49, and it's moving. Obviously, I'm filming this during live trading hours. And the ask is just a penny above it. So in other words, it's such a tight spread that if you wanted to either get into a position or out of a position, there's plenty of volume. You'll have no problem doing that. Now let's compare that to another stock that does not have as much volume. I'm going to pull up a penny stock here. And now keep an eye on this volume. It's 30,000 there. Now look at this, 6,000, 2,500, and this day, look at this, 500. The volume on this day, there were 500 shares transacted. And if you look at the price over here, this is a penny stock. In fact, literally, on this day, the price, the day where there was 500 shares traded, it literally was for 1 penny. And so 500 shares traded at 1 penny means there was $5 worth of transactions for the entire day for that stock. So this is a stock where it may have a wider bid-ask spread, and it may be harder to enter and exit positions. And so let's take a look and see if we can see evidence of that. So we can see the ask right now is at, and it's kind of hard to read this because the numbers are so small since it's a penny stock that it's like fractions of a penny. But it's a little bit more than 1 cent. It's 1.07 cents basically. That's what the ask is. And the bid is 0.7 cents. And it may at first look seem like, oh, that's a relatively tight spread. Maybe it seems like it's a tight spread because it's less than a penny between the bid and the ask. But if the stock price itself is a penny, then it's all relative. And if you think of it in relative terms, the bid relative to the ask, the difference here is enormous actually. It's, if you think of it like in dollar terms, imagine this was $70 and this is $107. Percentage wise, the ask is way higher than the bid as a percentage of the price of the stock. There's more than a 30% gap between those two. So it's an enormous spread. And so if you have a bunch of shares of this and you need to get out of the position, it may be hard to get out of the position. For one, there just may not be many buyers even who have open buy orders. And for two, you may get stuck with a terrible price due to the enormous bid-ask spread. So volume is a pretty big indicator of how easy it is to transact a stock and how liquid the stock is. The more volume, the more liquid it is, the easier it is to make trades and get good fills that don't have huge bid-ask spreads. So that is one way that volume can help investors and give them insights that could help inform their decisions. Another thing is to look at relative volume. So when there are spikes in volume, sometimes that can be an indication that the price is going to be moving. And this happens a lot, say, with a stock that might have news that comes out. And suddenly there's a big rush of volume and it might drive the price up significantly or down. And this can appeal to people who are short-term or active traders, people who are trying to capture the price movement in a stock over a short period of time. If there's a lot of volume that kind of suddenly comes in, it's relatively higher than at other times, this might be something that could cause movement in the stock price. And therefore, day traders or swing traders may be attracted to it for the potential to capture short-term price movements. So those are some ways that it can be helpful to be aware of volume. What we do at Stock Market Guides is we take metrics like volume and we look historically at how they may have impacted stock prices and investment opportunities. And then we take that data and we share it with customers in a way that we hope helps them make informed trading or investing decisions. If you have any questions about volume or just about the market in general, you can contact us anytime. Our email address is support@stockmarketguides.com.